Good evening. I'm Dan Fitzpatrick at stockmarketmentor.com. Two things. It's September 15th, and I've got the hiccups. So I'm going to try to get through this quick. You know, I've been talking about Mobileye lately, and so I thought I'd just return to it one more time because I think it's helpful to traders, even if you're not making the trade, and also if you're just kind of trying to get a sense of what I do. I'd like to not make this chart of the day be the stock pick of the day. I manage traders. I don't pick stocks. There's a huge difference. Managing traders is much tougher, trust me. Anyway, but with Mobileye, this deal was, you know, I liked it. Shoot, I liked it back here. I liked a lot of things back here. And then the bottom fell out of the market. Guess what this day was? My bet is October or September. Let's go back to August 24th when everything fell. So the stock's back to the 200-day moving average. Tanks on a downgrade by Citron Research, which is a short selling firm, and they do really good work. That knocked the stock down, and I thought, well, this is a buying opportunity, not because, oh, they really screwed this deal up. No, they didn't. They're looking at valuation. They're saying, like, they don't get how the company justifies the valuation that it has. And that's, you know, that's fair. They've got a huge valuation even now, a huge market cap. And so, you know, I get that. But I was just looking at this technically. Okay, so we get the first positive move here. This looked a lot like this, only lower. Same kind of deal. Very, very high volume. So this is a buy signal right here. Literally is like, okay, the next day, hey, the close was at 46.03. I'm going to buy if it's 46.04. And so you see what happens. So you're buying at 46.04. The stock is still working. Volumes return to normal, but you're in this stock. And now you can also, if you're making this trade, the reason I want to mention this is before, and again, sorry for the hiccups, members, you're in for a real treat, 25 minutes of hiccuping. But my original suggestion was, and this made it difficult, was you put a stop underneath this tail here, under this big long tail that ultimately saw a nice intraday reversal. And that's where your stop is. But, you know, the problem was it's kind of a loose stop. It made for a pretty risky trade. Well, now you've got a better one because, okay, the stock's up. It's holding above the 200-day moving average. Again, with the Fed on Thursday, all bets are off on anything. But you can have actually a tighter stop now, right around here, if your thesis is different, which would be the stock bounced up, it's finding support at the 200-day moving average. I think it's going higher. So you put a stop in here, and then you look for this kind of move. Now, if you were thinking, okay, I'm going to buy this stock because I think, you know, maybe it'll pull back, but it'll have a higher low than here. Well, then this is a ridiculous place to put your stop. Also, think about it. If that's why you're buying it, because you think if the stock pulls back, it's going to be at a higher low, then why are you buying it? Why not just wait and see if the stock does what you think it's going to do? My personal feeling right now, which is the only feeling you will ever get, is my personal stuff, is I think the stock's moving higher from here. But I'm just looking at it as a trade, only as a trade now, because it's a broken trend. You can look at the company and what they do, and it might be just amazing and all that. And I think it is pretty cool technology. It would allow me ultimately to text while I'm driving. How nice would that be? Anyway, so I think that all of that stuff, though, doesn't matter with respect to making money. The stock is broken, the uptrend is busted, and now it's just, in fact, this is what you see a lot. I'll point this out. Hadn't planned on it, but I will. You see this kind of move. nice uptrends here. And then a breakdown, a move back to test the bottom of this channel here. You know, and you can draw this any number of ways, but this is as good as any. To test the bottom of the channel, if it fails, then the stock moves lower and oftentimes will hit a higher low, just because this first one was so massive. So here you see a higher low, but this massive spike in volume. So there's a big, huge turnover in shares. This is, by the way, one of the techniques that I talk about in my short selling, my short selling course, as far as how to get these when the trend line's broken. You don't short here. You know, you don't short after the break. You short after the test, test of the break and the first sign that the stock falls back, is rolling over, and then you put your stop just a little bit, a buy stop, like kind of right back into the channel, and that tends to be a pretty good short. So in fact, you know what? Well, let me finish this. I'm going to make you wait till the end. So we get a higher low here as far as the close. I think this extended even lower, thus giving more credence to the bullish argument. We'll take this away. It extended lower, massive volume, and then is rebounding. So the advantage bulls right now. I'm looking for higher prices. The idea of shorting the stock is certainly not something that you want to do now. You can trade this thing both ways. You take it long, and then when the stock shows signs of rolling over again, and it probably will, that's when you short it, and now you're a complete trader, because you just bought something and then shorted it on the turnaround, and that's ultimately what you want to be doing. Now, I think it was last week, I was just like right in the middle of a strategy session. I was talking about a particular stock. I forget which one. I think it might have been Cirrus Logic, and saying, you know what? I think it was that, but this looks like a pretty good short setup. And then I said, you know what? If somebody wants to buy the short selling DVD product, I will give it to you for $100 off the regular price. And Gary said that he said I got 5 emails almost immediately. So I'm just going to do it again. I'm not even going to tell Gary, which I did last time, but I'm not this time. If you want to get a great product, and I mean it, I know it's great because I did it, on how to sell stocks without hiccuping, that's your product. And so it's $100 off for 5 of them, and that's all. And really 5, not 6, just 5. That's what I do. So if you want to take advantage of that, that's awesome. And if you don't, that's okay too. I'll never know about it because I don't handle that stuff. So anyway, I will see you guys tomorrow. Watch for the Fed announcement on Thursday. As I go into in a little more detail with members, I think the markets, it's going to gyrate around a lot, but almost immediately the market's going to look right past it. I'm not saying that it's not important. I'm saying it's just not particularly important to me or anybody who really looks at the market. If I'm a commentator on CNBC, it's really important to me. I'm going to get all the, oh my gosh, I'm going to get all the data I can. I want to sound like I'm really, really smart and have a deep understanding of Fed policy and this and that. But I don't really give a rip. It's 25 basis points. If they do it, great. One and done, you're out of there. If they don't do it, whatever, who cares? So you're going to get a short-term move in the market, but it's not going to have any impact on the trend. It's not going to have any, I might as well go to it now that I'm on a roll. It's not going to have any impact on the fact that this is a busted market right now. It was squeezing for the better part of the stinking year here, putting us all to sleep, and now it's broken. Now it's got the rebuilding process. If Jumpin' Janet comes out and says, we're not raising rates, you think that's going to make the market scream? No, it's not. It's not going to make it do much of anything. They haven't been raising rates. If she says we are going to raise rates, the market's going to say, well, great, 25 basis points. Thanks for caring. And then that'll be that. The only way the market would tank is if she has the complete and utter stupidity to say, well, this is the first of many rate hikes because we think the economy is so great that, congratulations to Ben, the money dropper, for saving the economy, and now we're going to move, we're just going to keep hiking rates. That would be a disaster for the market, and she's not going to do that. So the bottom line is, again, just in general, you're going to get some real wild gyrations on Thursday. Friday, you'll get a big move one way or another at the open. That's just the way traders work. You see if I'm right. And then after that, the market's going to do what it's going to do. It's not going to take any time at all before you'll see the commentary shift from what this really means to what are earnings going to be like next quarter. How's Google going to do? How's Facebook, et cetera, et cetera. So anyway, that's my long-winded and hiccuping way of saying you need to watch out for Thursday, but then immediately start looking at Q3 earnings, because that's what's really going to matter. Okay, I'll see you next time.